This is Kerry Artag with Artag Advisory, and this is the video supplement for the AgriTalk PM show Monday afternoon, March 29th. And I've got three markets here I'm going to be covering. The US dollar index, just to sort of, update you on what's going on there. The May feeder cattle market and June lean hogs. I'll cover all three. Let's jump to the US dollar. This is the US dollar index futures. And so it reflects the June contract. The futures and the cash are very similar in price. They're highly correlated. The charts are essentially identical. And if you listen to the show week by week, you'll know that a few weeks ago, this week here, the first week of March, I indicated a buy signal in the US dollar, anticipating a price gains of about 5% in the index. And so we are on our way to that. 5% roughly would be reaching into this 96.42 area, and we're about 1%. We're about 20% of the way there, roughly speaking. We had some follow through last week. I just want to let you know that it remains intact above 91.35, this buy signal. This is what I would call kind of a midterm buy signal. This could take 2 to 3 months. It could be 3 to 5 weeks, depending. Along the way, 94.33 to 94.88. The 94 handle highs here from last autumn can absorb at least weekly, possibly multi-week buying pressure, which is one of the reasons why I'm not sure if we could reach 96.42 over the next 2 to 3 months or over the next 3 to 5 weeks. Certainly if we rally this week, push into this zone of resistance in the 94.33.80 area and close above 94.80 at the end of this week, 96.42 just a few weeks away. This formation able to contain quarterly buying pressures. In other words, it could contain buying through the second quarter, and from here we can fall back into later year perhaps. But for right now, we have what I'm calling a near to midterm buy signal above 91.35. Now, truth be told, let me actually back up and just say that if we fall off this week and close below 91.35, then the market is likely over the next couple of months to test 88.29. And 88.29 is a significant long-term support level. When we fell to within 1% of it the first week of January, we basically bottomed out here. So we have essentially tested. We've dropped within 1% of it. But I prefer actual test. So 88.29, 88.30, really through June, horizontal channel structure represents long-term support that can absorb annual selling pressures, as I've been saying for months. And most recently, just about a month ago, we got a buy signal following this near miss of 88.29. This buy signal remains intact above 91.35. So I'm just letting you know that your export-sensitive commodities, corn, soybeans, may find added weight. I don't have any sell signals longer term in any of those right now. I'm just saying that this consolidation period we've experienced in the grains for the last month and a half may certainly continue into a May trade, so long as this rally continues in the US dollar index. So that's something to take into account. Let's move on to May feeder cattle. We rolled from April to May a week or two ago. The chart looks the same though. May inherited the resistance level at 154.55. This formation is actually in reach over the next week, 2 or 3. 154.55 long-term resistance in the feeders, able to contain annual buying pressures, and once tested, the market can quite easily fall back within several months into the 136 handle support, 136.70. I don't have an indication that we'll be testing 136.70, but what I'm providing here are sort of the mid to longer term parameters for this market. 154.55 ceiling, able to contain annual highs, 136.70 floor, able to contain quarterly or seasonal lows. If we close below 136.70, the market should fall south into the lower 120s over the following 2 to 3 months. But right now, I could see the market trading inside this 136.70 to 154.55 area well into summer trade. On the other hand, if we close above 154.55, that is a significant long-term buy signal. And let me show you what I would expect. Initially, 2 to 3 months, 173.20. But as we continue over the next year or two of activity, don't be surprised to see the 220s. And now there's some Fibonacci retracement levels and speed lines, all kinds of stuff on the way up that will be respected for their ability to contain monthly, if not seasonal, buying pressures. But if I'm looking big picture, a settlement above 154.55 at the end of any week, you have to consider the possibility of the 220s over the next year or two of trade. And certainly, if we were to settle above this 173.20 formation, say between now and the end of summer, under that scenario, we could get price acceleration that could take us into the 220s possibly by the end of the calendar year. But I'm way ahead of myself here. Just take you back to this chart to remind you that we're pretty neutral through summer, really. 154.55 certainly in reach, able to contain buying through the year, and from there we can fall back to 136.70, where we could bottom out into summer trade and fill this wedge in for months to come. Finally, lean hogs, worth mentioning. Now, let me talk about the lean hog index itself. It's not really an underlying index, but it is on the CME. It is a popular lean hog index, and we had a buy signal a couple of weeks ago above this formation at 88.53, anticipating roughly 30 handles higher to 126.47. That buy signal remains in effect, and as it turns out, the lean hog futures themselves, presently the June contract, elicited last week for the first time a settlement above a very similar formation this week at 100.27. So 100.27 June contract is our floor of support now into summer trade. The next 3 to 5 months likely to yield 134.90, where we can place an annual high. Now, also, there are meaningful resistance areas in the 108 area, 113.5, 121.5, 127.5, all the way up that I could show you, but that's not the purpose of this video. It's really just to sort of paint a big picture. So bottom line with June lean hogs, or the lean hog market broad speaking anyway, bullish above 100.27, expecting 134.90. Now downside, if we close the week Thursday, short week, back below 100.27, 86.20 becomes a realistic 3 to 5 week, 2 to 3 month target, perhaps, where the broader lean hog market can bottom out into summer trade. That is really all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.